Would you like $100,000 of cash in your pocket to pay, let's say, overdue bills, a mortgage, take care of some healthcare bills coming your way to the ongoing corona crisis? Well, my friend, the CARES Act may have just the thing for you. We're going to go over how the CARES Act basically gives you $100,000 and look at the pros and cons of taking that money and seeing if you qualify. So be sure to click the like button if you get any value out of this video whatsoever. And while you're just clicking away, exercise that index finger a couple more times and click the subscribe and notification bells so you get notified of more videos just as they're coming out. But with that, let's dive right into the video. What's up, you guys? You're watching B2B Fusion. I'm your lovable, affable, affordable host, Derek West. On B2B Fusion, it's our mission to inspire you to take imperfect action on your business and personal finances through the power of technology. But enough with the formalities, am I right? Let's talk about the $100,000. So as you're probably aware, unless of course you were in the NRA for the last 120 days, that there's been a global pandemic of unheard proportions plaguing humans of all shapes and sizes. This pandemic, and specifically the damage that it has been shown to cause to humans, and the fact that it's contagious as the common cold or flu, has caused governments local, state, and federal to require house arrest. Quarantine. For better or worse, probably mostly worse, this has been the modus operandi for the last 2 months roundabout, and it would seem to be staying that way for at least a month more. At the very least in many parts of the country and the world. The hope is that there will be a vaccine for this pandemic sometime in the near future. And at that point, we could all breathe a little bit easier. But in the meantime, as I'm sure you're also aware, this lockdown has caused untold damage to the economic prospects of millions of people across the globe. While many people feel that this lockdown was necessary and the resulting economic damage to people and their way of living was worth the price of preventing perhaps millions of deaths. I mean, who can argue with that logic? But what do people do in the meantime? Well, as I'm also sure you're aware, politicians of all stripes have been busy passing stimulus bills to help folks that have unfortunately been adversely affected by these lockdown orders. I did a couple of videos earlier on some of the stimulus bills that have been passed already. Please take a look at the description for more info on that. Tucked in those stimulus bills is a key provision that allows $100,000 gifts to people who are suffering mightily. What do I mean? Well, it's all buried deep within the text of the CARES Act. We read it so you don't have to and can give you the skinny. You see, for a lot of people, their retirement plan is the money that they put away in their 401k. It might be a little, it might be a lot. It really is just a matter of how much you pay attention to it and whether or not you specifically put money aside into it. A lot of people just squirrel away whatever money is being automatically withheld from their paychecks by their employers. And others double and triple down, putting that cash away. If you think about it, it's a great way to save and grow your cash if you don't really want to think about investing. Sort of out of sight, out of mind, until you really need it. That is until the pandemic hit, and you may have been furloughed or laid off. In the meantime, you have a mortgage to pay, kids to feed, a Lambo to purchase. Definitely kidding on that one. Do not ever, and I mean ever, buy a Lamborghini or any car out of the money you get out of your 401k savings plan. A more stupid use of money there could not be. The key here is that the US government locks down 401k money so that a lot of people never even think of taking it out. For example, there is a 10% early withdrawal hit and a 20% federal tax on pulling money out of your 401k. But with the recently passed CARES Act, certain restrictions have been lifted. Congress eliminated the 10% early withdrawal hit and the 20% federal tax withholding. Eliminate is a strong term. In the past, if you took money from your 401k, you owed the IRS 20% of that distribution in taxes in addition to the 10% early withdrawal fee in that same calendar year. Meaning that if you took $100,000 out of your 401k, you would only really get about $70,000 of that money in that calendar year because you owed $20,000 in taxes plus a $10,000 early withdrawal fee. Definitely a large hit. But thanks to the CARES Act, you would still owe the $20,000 in taxes, but it would need to be paid back over 3 years. So if I were in a situation where I desperately needed money from my 401k, I could take the money that I owed in taxes and put it into an account specifically there to pay those taxes. Or you could even just divide up the amount you owed by 3 and pay it back in 3 easy installments. Now, the other popular way that people used to get their money out of the 401k was to borrow the money from that 401k. Borrowing that money was, just like borrowing money from any other institution, and there's typically an interest rate associated with paying it back. And pre-CARES Act, you could only borrow up to 50% of your 401k balance or up to $50,000. Well, language in the CARES Act has allowed for 401k holders to borrow up to $100,000 from their 401k or 100% of the balance, whichever one is the largest. In other words, if you have less than $100,000 in your 401k, then you can borrow the whole thing. And if you have more, you can borrow only $100K. Clear as mud? Awesome. Another thing that's awesome is that loan payments back to your 401k are suspended for the rest of the year, and you will not have to begin paying them back again until 2021. That's a huge deal. Let the good times roll. Not so fast. There is the little item of having to qualify to be able to do any of this. And probably even more importantly, should you do this if you have the opportunity to and you qualify? Well, first things first, you might have the appropriate amounts of money in your 401k and the need for the cash. But do you qualify to be penalty-free for 401k loans and distributions? Well, quite frankly, a lot of people will qualify just based on the language of the CARES Act. To qualify for the 401k distribution and loan relief, either you or your spouse or a dependent should have been diagnosed with the coronavirus. And obviously, if this has happened to you, your first thoughts should be on getting better from this illness and focusing on just being well. But we live in the real world, and there are real world implications of coming down with such a sickness. That would be hospital bills, childcare bills, loss of work, and so on. All those things can be completely devastating to people going through them. And this 401k relief could actually go a long way with getting back on your feet. The next qualification is that you have experienced adverse financial consequences as a result of being furloughed, laid off of your work, or had your hours reduced. That will apply to a ton of people in America thanks to these lockdowns. Another stipulation is that you are unable to work due to a lack of childcare. Also, a ton of people will qualify due to that clause. Another important piece of criteria, you had to close or reduce the hours of a business due to the virus. And the final catch-all, you have been financially impacted by other factors determined by the Treasury Secretary. Sort of a broad clause. And as you can see, a solid portion of Americans could technically qualify for this carve-out. People I imagine will not qualify are just people who are forced to work from home due to the coronavirus, who have not had their hours reduced or lost any wages. I must stress, definitely speak with your accountant or tax professional or financial advisor to see if you could qualify. If they're smart and if they're good, they'll likely ask you this next question as well. Even if you do qualify, should you do it? Something I fear a lot of people don't really think of is that if you really qualify for something, are you in a better position if you take advantage of it? In other words, will you be in a stronger financial position in the long run if you take this 401k distribution or loan now? Well, unfortunately, the answer is most likely no. Now, like I've said a little bit earlier, if you've been hit by extensive bills for a healthcare stay due to this virus or were otherwise significantly hurt financially due to this virus, and you generally have no other money, then yeah, this could be something that could help you get back on your feet. That said though, there are a ton of other provisions in the CARES Act that can help you get back on your feet. But if that's not you, then this is going to be a bad deal for you in the long run. And why do I say that? Well, with investing, you really should not think of your money as the balance that you currently hold. Rather, you should think of it as the balance that it could likely become. I know the stock market has been a roller coaster the last couple of months, and that's where a lot of people's 401ks are invested. Because of that volatility, the temptation is to pull out all of your cash and to put it to other use. Big mistake, for a couple of reasons. First, the stock market is bobbing around the bottom and on its way back up right now. If you pull out right now, you're selling at the bottom of the market, defeating the whole purpose of investing. Remember, buy low, sell high. If you still have money in your 401k, you're probably better off waiting till the market gets back to its all-time highs and then taking a distribution of some sort. Another reason why you should be wary of taking a distribution or a loan from your 401k, which really relates to the first reason, is that you're losing out on the effects of compound interest once your money is no longer working for you. Whenever your money is sitting out in cash on your desk in a non-interest-bearing savings or checkings account, your money isn't working for you. It's quite literally losing value. And I have a feeling that in a short amount of time, due to all of this stimulus, as a matter of fact, money will be losing value faster than ever. And generally anything that you buy with it is going to depreciate in value, unless of course it's like a real estate investment or something like that. I say all of that to get the point across to you that you should avoid taking a loan or distribution from your 401k at any time, including now when the temptation to do so is higher than ever. Other temptations that are high at this time: clicking the like and subscribe and notification buttons for the YouTube algorithm, Those are temptations that I feel you should get into because we have more great videos coming out just like this one, and they drop weekly. So you're definitely gonna want to be in the mix for more great videos that are coming up. And just a big shout out to all my subscribers, as just a couple of weeks ago, I crossed the 1,000 sub mark. And I definitely couldn't have done it without you guys, so big props. But even with that, leave a comment down below on what you think about withdrawing your money early from your 401k. Are you gonna take the bait and lose out on all that compound interest? Or are you gonna stick it out and watch your nest egg grow as we recover from the corona crisis? We'd love to hear from you. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take imperfect action on your finances and business using the power of technology, and we'll catch you next time. Peace.